Bitcoin and crypto are moving up. Let's take a look at why they're moving up and if we're near the top of the market or if we're just getting started. Hi, my name is Jay Scott, aka Crypto Cowboy Montana, and I'm founder of Freedom Life 3.0, where we help people take back control of their financial lives, focusing on creating wealth by investing in alternative assets like crypto. All right, disclaimer, Crypto Cowboy Show is not financial advice. I'm not a financial advisor, so just a guy on the internet. But I've saved enough for my retirement using Bitcoin and crypto assets. All right, so let's go and look at our first chart today. So this chart is comparing the percentage of returns of $1,000 investment in Bitcoin against the average savings account. So we know that anything denominated in dollars is going to be losing to inflation. This number is going to surprise you, but I'm talking about 10% inflation. It's not the simple 3% that the Fed targets for inflation or that the media talking about. When you add in all the numbers in real inflation, it's around 10%. So you got to be earning something in 10%. So certainly this chart is going to show how pitiful it is if you're saving anything in a savings account, a money market, or a CD. Just take a look at Bitcoin here. So you can see that in 5 years, you'd have made $104 in a savings account versus 8,116 in Bitcoin. I don't know, that's shocking to me. So I'm going to show a lot of charts today of just why you should be in Bitcoin and why I think it's still got a long ways to run. So let's keep going. This is an interesting chart because people have said that Bitcoin is dead over and over throughout its 15 years since it was created. This chart is showing that when a big media outlet or a pundit announced that Bitcoin is dead, and if you bought $100 worth of Bitcoin every time they did that, look what's going to happen. So over the last 15 years, it's been pronounced dead 440 times. So if you bought $100 worth of Bitcoin each time and you invested a total of $44,000 over 15 years, or an average of $2,933 per year, that $44,000 investment would be worth, wait for it, $120,885,574. Now, I'm not really telling you to go track the news and buy every time, but isn't this interesting? And a much simpler way to do this, just match that $3,000 a year, put it into an automatic DCA account and buy $250 worth of Bitcoin every month. That's what I'm doing. I'm dollar cost averaging, been doing it for 5 years now, and it saved my retirement. So again, let's move on, more charts. So you've all heard of the psychology of the market, right? And I love charts like this that show what markets, how they behave. And so we just hit an all-time Bitcoin, an all-time new time high yesterday, around 124 and 25,000, right? So according to recent analysis, many experts believe that the 25-26 could mark biggest bull run in crypto's history. And it's driven by a mix of factors. So you've got institutional inflows. You've got ETFs that are pouring tons and tons. So this is different than past cycles, right? Because mostly it was retail. This year we've got institutional moving in. We've got regulatory clarity. So this is global regulation and it's unlocking all sorts of new markets. We've got real world adoption. So blockchain is expanding beyond speculation into finance and gaming and enterprise tech. Some people are calling this the acceleration phase. And this is where you can turn life-changing gains. We've also got altcoins like Ethereum and Solana and Sui being spotlighted for 100% returns. Every cycle that looks chaotic sometimes actually can be the times where you've got to prepare and you've got to know if you're going to sell or you're just going to ride it out. You can see right in here, I think we're in this thrill phase and things are going up and up and we're not quite to euphoria. But this is the time when people from probably right about now, when things are starting to heat up, they're going to start FOMOing in. So your Uber driver and your deli manager are going to start talking about crypto. And people that don't normally pay attention are going to start paying attention. And now we're going to start getting to this euphoria stage. And those people are going to start buying at the top. Now, hopefully, you bought in down here under hope, maybe even disbelief. That's what I've been doing. I've been buying when the market was really low and writing it up here. And I'm not going to sell any of my Bitcoin. I think it's way too valuable and it's going to $1 million. So I'm not going to sell it. But if you needed to, or you thought that you need to, this is the time that you'd want to be selling up here in euphoria. Now, I will be selling some altcoins. And if you have any altcoins that you're not sure they're going to make it through another downturn, or you just want to take some profit, then this is the time that you want to be selling, not when everyone's talking about it. And it's hard to be able to sell when everyone is euphoric, but that's what the smart money does. And at some point, it's going to come down. We're going to get into anxiety and denial and so on. The retail investors that don't really understand these cycles, they're going to start freaking out and they're going to start selling at a loss, only to realize that if they'd have held it, the market's going to come back up. This cycle just repeats about every 4 or 5 years. The question that I have is this cycle going to be any different? I think it is. We have so much more institutional demand. We've got countries, we've got regulatory clarity that are probably going to make this cycle longer and or not dip as much, but we'll see. It's been pretty predictable in the last 15 years that every 4 years or so, we get this big dip in the crypto market. And really, if it continues, I'll be happy, because if it dips, then the assets that I really have conviction in and believe in, like certainly Bitcoin, Ethereum, Solana, Sui, those are my big 3 picks. I can get them cheaper. And if it does dip, that's great. But I don't think we're going to have another 70% dip, but we'll see. This is important to know. This is the key to successful crypto investing, is understanding the cycles. So I really want you guys to understand this and know that as we're coming here and we're in the thrill phase and we're going to euphoria, that's great, but just know that we're going to have a downturn. Now, the question is, a lot of experts used to think that end of 2025 was when we'll probably be at the end of this cycle. And again, because of some of these new demands, I think we're going to push this definitely into 2026. The question is how long, and then when it rolls over, how deep. So we'll just keep our eyes on that for now. So another little chart here. You can see that all the signs look that this is going to be a big push. So Bitcoin looks like it's ready to explode to continuing all-time highs, somewhere in the $200,000 range. This one shows that it might hit 215,000. So we'll see. Back in 2029, we had sort of the same pattern, and it shot up to 69K. And so the projections are here at 215K. We'll see if this is going to be by the end of the year. I actually think so. I think we're about ready, literally within this week or next couple of weeks, certainly this month and throughout December. I think we're going to see a holy tear, and we're going to get into 200,000. Either way, hopefully we're prepared. We're riding it up there. And again, what I talk about here in Crypto Cowboy Show is we're investing for at least 5 years or more. And so it's not like I'm saying, oh, I'm going to sell everything when it gets to the top, but it's just fun to see, right? It's fun to see. All right. So asset managers like Franklin, Fidelity, CoinShares, Bitwise, Grayscale, they have all submitted to launch spot Solana ETFs. So with the staking functionality. So hopefully you understand that Solana and Ethereum are one of the 2 best crypto blockchains, crypto assets that you can buy and hold and stake. Very easy to stake, earn another 4 to 7%. I think Solana, the nice thing about it, it's 6 or 7% that you can earn on staking, and you can pull it out within a day or within 7 days. I think Solana, I think mine was 7, maybe 14 days that I just had to wait to unstake, but that's not a big deal if you need to get to that cash because you're earning 7%. Watch out for this. I think it's a very bullish move. And of course, there are actually a lot of other crypto assets that are looking to get ETFs. And again, this is just more fuel because more institutions can take their clients and put them into these crypto assets much faster, much simpler. And again, it's another demand for crypto. Okay, here's the next one. It's like nearly 40% of the 2,549 respondents said that Bitcoin makes up the majority of their crypto portfolio, underscoring its dominant role in retail investing. So this isn't really surprising. Retail, I think, has been in the news just within the last year that institutional money is coming in and they're figuring out that Bitcoin's the way to go. But for a lot of retail people, we've known for a long time, and it's how we're catching up to the wealthy. And for me, it was how I caught up on my retirement savings because I hadn't saved enough. And what saved me is getting Bitcoin and buying into Bitcoin 5 years ago, and now holding it and sleeping well at night, knowing that my retirement is going to be just fine. Bitcoin's got a lot of demand. It's the future, and it's what that I'm counting on, and I'm feeling really comfortable in that. All right. So again, Bitcoin's got room to run. We're not overheated at all. We're still in this yellow zone. So I really like these kind of colorful charts. Some people call it the Bitcoin rainbow chart. When we get up into the red, that's when we get to the top of the market, when it gets the euphoria, and it's probably going to do a downturn. But you can say here, we're still in the yellow. And so it's on its way up, but we've got a lot more room to run. So again, just be patient. Be happy if you got your bags, but you can still be buying. I'm still buying at this because, of course, I think it's going to be $1 million by 2030. So why wouldn't I buy? All right. So I know I've talked a lot about, and hopefully you understand that there's a couple factors that drive Bitcoin's price appreciation. And that is, you got the halving. So every 4 years, we know that Bitcoin, the rewards that the miners get are cut in half. So that limits supply. And so when you've got a limited supply, and then you continue to have demand, price has to go up. The other thing that's probably even more important that I think a lot of people are now starting to just understand, and that is how global liquidity, the business cycle and the global liquidity cycle, which is about every 4 years, moves up and down. And when there's a lot more liquidity being put out by governments, money printing, basically, then Bitcoin rises. That money, that extra money putting to the system goes to assets. And a lot of people are putting more money in stocks, but they're also putting it in Bitcoin. So the global money supply is the total amount of money circulate in the economy. And global liquidity is the measure of how this money moves. And all risk assets, including Bitcoin, go up. And so we can see here in this yellow that the price lags on Bitcoin as global liquidity is going up. And we can see that it dipped here in the last year, but now it's on its way back up. And so we'll see Bitcoin move 3 to 6 months in a lag time from liquidity, but it's going up. And that's very good news. It's just another reason that we can see this is the US money supply. We can see in July, it's going, and you can see clearly May, June, July, the global or United States money supply is increasing. More money printing by the Fed. And this is good news if you're in assets. So this is China. Again, China's been moving it up. They're a huge economy. And so when China is printing money and pushing money to the global money supply, that's really good for Bitcoin price. This is interesting. We've been fighting a battle against Wall Street. If you're a crypto Bitcoin holder for years now, Wall Street saw crypto as a threat for sure. And now they've realized that once they've got their head around what it is and they can see it is the future, now they're starting to FOMO in. And it's just shocking because most large Wall Street institutions didn't want anything to do with crypto or Bitcoin and wouldn't let their clients even have it. JP Morgan is now seeing that they're calling Bitcoin the debasement trade, which is absolutely what we've been talking about here in the crypto industry for a long time. And so they're seeing Bitcoin hit 165,000 by the year end. Bitcoin is the largest cryptocurrency. It's undervalued relative to gold. So that's interesting because gold's been on a tear. So the Bitcoin to gold volatility ratio has fallen below 2. That's a big number for them. And they're saying that basically now Bitcoin is less volatile than it used to be, especially connected to gold. So they're recommending people now start moving from gold into Bitcoin, or definitely get into Bitcoin. And this is important. So what we're seeing is that gold has had the best year ever. In fact, I think the numbers are gold is up 54% this year, and I think Bitcoin is 31% this year. But I think we're going to see Bitcoin catch up by the end of the year, surpass gold, but it lags about 6 months. So when gold's taken off, Bitcoin will start to move higher with gold about 3 to 6 months after. So that's fascinating. So again, just another chart about inflation and the money debasement trade. And so if James Lavish, he says, if you don't believe in Bitcoin, you might as well say you don't believe in inflation. Because if you have inflation, then people are realizing that the only way to not be hurt by inflation is to invest in assets that go up. So when money printing and global liquidity is going up, that causes inflation. If you're in dollars or any assets denominated in dollars, your value of purchasing power is going down. But if you're in assets, they go up, and Bitcoin is the apex asset, goes up the most. So you can see CPI or inflation, as it goes up, Bitcoin tracks with it. So again, if you ever hear, when you start hearing about inflation, if you're in assets, you're in good shape. If you're not, you need to get in them so that you can understand that it's the only way to catch up and to be on par. It is what it is, folks. Inflation is not great. I wish governments didn't money print, but they do. And your only hedge is to buy assets. All right, so this is interesting. Creative Planning's Charlie Bellio. So he says that gold is up 48%, but Bitcoin is 31%. And so they're the number 1 and 2 assets going up this year. So you can see Bitcoin and gold up here are beating stock markets, every other asset. So folks, again, gold and Bitcoin, it's where it's at. Why? We'll talk about that more, but generally when the economy is uncertain, when world wars and politics are uncertain, when the value of the dollar and governments, and especially the US government, are printing so much money and people are wondering, they have so much debt that will other countries still trust to even buy their treasuries? Will they stop buying treasuries? What's going to happen to the dollar? Will it crash? People want to be in these harder assets like gold. Traditionally, it's always been gold, but now it's Bitcoin because the digital gold on steroids, gold with wings, if you will. That's what Bitcoin is. And so it's a good time to be in crypto and Bitcoin. Morgan Stanley, another Wall Street, says it's going to have its 16,000 financial advisors, which they're managing at least $2 trillion in assets. They're going to have their people allocate to Bitcoin and crypto. So this is big news. Just a year ago, certainly 2 years ago, these Wall Street firms wanted nothing to do with Bitcoin. They were advising their clients to stay away from it. And it was tragic because they were putting their clients in these 6% bond and stock index funds. And that is not keeping up with the 10 to 14% of inflation rate. And so they were basically recommending that their clients just lose money. Now they're finally getting it. Now you can put it into assets that way outperform inflation and is the only way to keep up with your wealth. In case you're watching this channel, which we focus on catching up on your retirement through crypto. That's an interesting chart. So if you, S&P 500 is always been the where you put your money to save and invest and create your wealth. But it doesn't come close to what Bitcoin is doing. So the S&P is up over 100% since 2020 when you denominate in dollars. But that same index is down nearly 90% in the same timeline when you denominate it in Bitcoins. Bitcoin is just outperforming, and you can see that even the stock market, which has always been the way to go, is down 88% when you compare it to Bitcoin. It's just another chart. Like I said, today's just full of charts of why you should be in Bitcoin. If you're in Bitcoin, you're in good shape and it's still got room to run. But the old school of creating your wealth in the stock market is being way surpassed by Bitcoin and crypto. So I think President Trump is talking about giving some stimulus checks with the tariff money. I'm not sure that's a great idea. We saw what happened in 2020 when we had so much money coming in. We can see here that these different times that they added stimulus checks, Bitcoin did go up. So if you're in crypto and the government is going to issue stimulus checks, put it in Bitcoin, know that it's going to go up. So the debasement trade, we've been talking about this. It's so interesting that Wall Street is finally really putting out there. It's if your money is in anything denominated in dollars, you're losing. And so they're really now understanding that it's got to be in something that earns 10 to 20, 40% like Bitcoin and other cryptos. So you got all these inflows. You got $6 billion of inflows, and big money is moving in to the global financial system. And historically, surges like this, when investors lose faith in traditional credit markets, it makes this moment different in the context of global growth because it's slowing, debt loads are exploding, and the risk of major credit event is out there. People are thinking about this, and this is where confidence starts to erode. Trust is eroding. So Ken Griffith of Citadel said, see my screen. He said that we're seeing a substantial asset inflation away from the dollar as people are looking for ways to effectively de-dollarize or de-risk their portfolios vis-a-vis U.S. sovereign risk. People in the financial world are saying, look, if you're worried about the economy and the dollar, we need to start moving into gold and Bitcoin. So it's not every day that you see the world's best. Goldman Sachs basically says that Trump said that America can grow its way out of debt. Now, what this really means is it's debasement. If they're going to grow, that means they're going to print more money. They're going to push the economy. Inflation is going to go up, and inflation goes up, Bitcoin goes up even higher. S&P will go higher too. All assets go higher when there's money printing. So I just think this is interesting. We're really moving. Bitcoin is still the king. That's my last slide here. All right, so that's some charts. I just wanted to hop on here and just say, guys, Bitcoin is on a tear. It's going to continue. Here's why. Stay tuned, and we'll continue to have more charts, more information about why it's the best time to be in crypto. I hope you enjoyed this. You can subscribe, and we'll see you next time.